Investment advisor and Bitcoin strategist Plan B is extremely optimistic on the 2022 outlook for Bitcoin. He announced some good news for all enthusiasts of Bitcoin on Twitter. Unlike gold, the rate at which Bitcoin's supply grows will constantly decline, eventually reaching zero once the currency's limit of 21 million coins is reached. Bitcoin's high still remains at $69,000, which we saw last November. If it surpasses that, most analysts say the upward trend will likely rise until Bitcoin reaches 100,000.
One thing I look at for bottoms is 200 week moving averages. So Bitcoin has never gone a monthly close, has never had a monthly close below the 200 week moving average. So that can be seen as a bottom, but it's very, very low, right? So
that's like a short moment and it's going to bounce. Yeah,
exactly. That would be a perfect moment to buy. But then there's the realized cap, the realized price. You can do a 200 week moving average or another a time interval, but then not equally weighted, but weighted with how much Bitcoins were bought in that month or period, and then weight that against the price. So you can weigh the price based on how much Bitcoins were traded at that price. And then you get a realized cap, a realized price, and that is much higher than the 200-week moving average. And so that's every single Bitcoin of the 18.9 Bitcoins out there when they last transacted. But if you make that into that number is heavily skewed by the lost Bitcoins and the first million Satoshi coins. So if you narrow the window down to say also 200 weeks or less, that number goes up significantly to in the 40,000 range, depending on window.
What do you think the biggest catalyst? There was a bunch, but what was the biggest catalyst for us not getting to 100,000 plus? What do you think happened last year?
Yeah, I guess the main event was China ban of mining. It scared all the miners out of China. China has always been had a dominant position in Bitcoin because of the mining, because half of the Bitcoin mining was there. It was always perceived as a risk, as a threat. So now they banned it.
51% attack, yeah.
Yeah, so the actual threat and fear became reality. And yes, the hash rate went down 50%, and then it went up to, it started to move up 2 months later to the new all-time high right now. And all the miners had moved their coins or their miners to Kazakhstan and the neighbor countries.
They're having issues right now too, actually, right, with the power.
Yeah, big issues. But most of the miners also went to the United States, of course, Texas and flare gas and etc. Because Kazakhstan, the turbulence we see there right now is not impacting the hash rate too much. So, but that was a big thing, and together with it, the price went down because all the miners, of course, gone and the hash rate gone, created a risk. Will it come back? Will China take over the hardware and 51% attack the network or something? And the miners, of course, had to relocate the hardware, and that cost money. So they had to sell all the Bitcoins they had, or some had to do that. Large selling, and so that was a major surprise because that came for me at a bad moment, because that was exactly the moment that Bitcoin was rising and rising to the stock to flow levels of 100,000, and then all of a sudden, bang, we're back at where are we now? Well, 40 something, and so that was the biggest surprise to me.
Do you believe in the Bitcoin lengthening cycle theory?
Yeah, I talked with Ben Cohen about that in very much detail, because we have different definitions of what that is. So he's very much into that lengthening cycle and diminishing returns, I think. I always thought that is like the time model, the logarithmic model, that nice curve that's also sometimes used as the demand part versus the stock to flow as the supply part. But it's much lower than. But what I learned from that interview was that lengthening cycles and diminishing returns, you look at the top that the market tops. You look only at the market tops, where I look at averages, right? I look at the regression line, the averages. So he looks at market tops. So lengthening cycles means that the top is later every cycle. And right now it seems like if this was the top, the 69, it was at the same location as 2017. So it's not really lengthening. If the top is not in and will be here in this year, for example, in the summer, then we have, according to that definition, lengthening cycles.
Yeah.
And diminishing returns, same thing. So the tops tend to be relatively lower each cycle. So 2017 was lower, had a lower top than 2013, and now if 69 was the top, we had a lower top this time around. Of course, if we go higher,
this is my theory of contracting the CAGR.
Yeah. But I do not. Well, I should say that differently. I'm not that much interested in the tops and the bottoms because those are one-day events. I can't buy or sell large positions in a day. So I'm much more focused on the average plateau where we, like the 50,000 of last year, you could have bought and sold a lot of money on those levels. So where the exact top is and where the exact bottom is, actually, I don't really care. And but I should say the general thought that the lengthening cycle guys and diminishing return guys have is that the volatility, as the market grows, the market cap grows, the volatility goes down. I don't think that necessarily is the case with Bitcoin.
Why do you think that? Yeah, explain.
Yeah, because like I said before, I think volatility is suppressed in most markets by the quantitative easing, by the central banks, by...
Okay, this is outside money.
Yeah, and defaults are not permitted. So a company will be saved by a QE money and not letting... not being allowed to default. So where does the volatility go? And Bitcoin is one of the last places on earth where volatility can exist. And I think if you look at option markets, they for sure do not foresee lower volatility in the next 12 months. So I guess the market the Bitcoin price will behave, the distribution of Bitcoin prices will be non-normal and very power law distribution like, with large volatility and actually without a clear standard deviation or variance. So that's a special part of math or statistics, if you will, which also ties nicely into the exponential growth theories, that it's a non-normal distributed returns market, and volatility plays a really large role, and I guess the volatility will stay, but maybe I'm wrong. So it's very interesting and important to keep watching the implied volatilities from the option markets, because that's where volatility is traded directly, and those markets do not indicate any decrease of volatility in the next 12 months.
Despite the fact that Bitcoin lost about half of its value during the meltdown that followed the November peak, its market cap has remained nearly unchanged. The market cap is trending near to the all-time high, as Plan B predicted in his tweet. This could signal that the holders of Bitcoin are really steering the price, and if the trend holds, Bitcoin could soon be worth $100,000 or more. Plan B says both stock-to-flow models and logarithmic regression point to 100,000. He says that he is one of the few who thinks we're in a normal cycle, and that we'll go down again after the all-time high, and that everybody hopes for the super cycle or for the hyper-Bitcoinization to start right now, and that we do not have a big crash after next all-time highs. But as much as he hopes that we don't see the crash, he thinks we will. Plan B thinks we'll be managed by greed right now and by fear later on, and see another minus 80% after we top out at a couple $100,000. Let us know in the comments section down below what you think about Plan B's price prediction and where you think Bitcoin is headed in the current market. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.